G. So, hello students, how are you? This is your teacher, accounting teacher Haris Bhatt, and today we are going to solve the question of what we were doing. Today we are going to solve a question of A2 accounting ratio analysis, which has come in October-November 2024, variant 32, question 2. So, October-November 2024, variant 22, question 2, which was held on 24th of October this year in 24. So let's do it. It was an easy question. You can't consider that question a difficult one because of the reason that ratios are one of the easier chapter as far as A2 is concerned. You might not find it that difficult, but it has a clear linkage with AS ratios, and definitely it has a linkage with A2 ratios. And with that, the question will be completed, and it has a also some part will be related with company counts. So let's see. Let me open the question. This is the second question we have from the October-November 2024 variant 32 question 3. Sorry, question 3. Because question 1 we have already done manufacturing counts. I have uploaded on my YouTube channel. This is question 3 for ratios, and question 2 is about profit and loss sharing arrangements. And inshallah, I will solve that question also for you in the coming days. So let's continue the question first. Vanisha has 16,000 to invest. She has 3 objectives. So Vanisha was definitely be a sole trader or whatever. She wants to invest in a company, and she was having 16,000 with her. Number 1, the objectives were being risk averse. She wanted to invest in a company that would always have a gearing ratio of less than 40%. Always remember that gearing ratio basically tells that either you have invested in the business through your own money, which is capital, or in the form of shares, or you have taken a loan to contribute towards your business for the contribution which you need to make towards your business. So highly geared company will always be at risk because we have to pay interest costs, finance costs, which will decrease our profit. And that non-current liability, debenture or bank loan has to be repaid back at some stage. The business will become risky, and your financial statements has to be uploaded or given to the bank to see that either you will be able to pay back the loan or not. Then you have to, pledge some collateral also, some security also to the bank to get the loan. That all be a part of that. Number 2, so gearing ratio will be factored. We have to calculate the gearing ratio to take the decision that either we should invest in that business or not. Because Manisha wanted that he or she should invest in such a company in which the gearing ratio should be less than 40%. So obviously, we have to calculate gearing ratio so that we might consider that if the gearing ratio is higher than 40%, we will not be going to invest in the company. Number 2, she wanted to earn a return in the form of dividends of at least 10% per annum. Return of dividend will be affected by 2 different ratios. One is earning per share. The more the earning per share, the more you will be able to pay the dividends. Then you can calculate the dividend per share, so that you must be able to know that on each share how much dividend you are getting. And for that, you might need to find a dividend yield ratio, because dividend yield ratio tells you that if you purchase any shares of a company from the market, so for each dollar invested, how much return, how much dividend you are getting on each dollar invested. Which ratio tells you this? That is dividend yield ratio. So you can easily assess that in order to achieve these 3 objectives, we are going to find the ratios of this company in which we want to invest, and the ratios are on, apparently it looks that we need to go for earning per share, gearing ratio, market price earning ratio, dividend per share, and dividend yield ratio. Because price earning ratio is also important, which makes you decide that either you invest in that company or not, but not for all these three objectives. During 2021, she bought 5,000 ordinary share of 2 each in X Limited. The following information is also available about X Limited. So information is given for 31st December 2021. You have to calculate the ratios for 2022 and for 2023. I am telling you in advance. Why? Because I want you to have an idea about the question, that what we are going to solve in the question. We have to calculate the same ratios which I have uttered, in the last minute, but for 2 years, for 2022 and for 2023. It is going to come in the future, which I'm going to tell you. So at 31st December 2021, if you just look at the question, she bought 5,000 ordinary share of 2 each. It means that the per share value, price per share, nominal value of the share is 2. So 5,000 into 2, she is still investing 10,000 out of 16,000. No matter, I'm just telling you. So share capital is 2 lakh. 2 lakh means that the number of shares 2 lakh divided by 2, that is 1 lakh. Share premium is 20,000. Retained earnings 165,000. Non-current liabilities 2 lakh 15,000. Of the non-current liabilities, 10,000 was due to be repaid during 2023 and the remainder in 2026 or later. So you need to understand this, which is very clear and which is very important, that, okay, you need to be very clear that of the non-current liabilities, 10,000 was due to be repaid during 2023 and the remainder in 2026. It means that out of 2,15,000, 10,000 is a non-current liability. But not for the year 2021 and not for the year 2022. For the year 2022, at the end of the year 2022, out of 2,15,000, which is a non-current liability, 10,000 is going to be current liability. So the non-current liabilities will be 2,05,000 for 2022. Why, sir? Because out of 2,15,000, which is a non-current liability right now, for in 2022, 10,000 is supposed to be repaid in 2023. That is supposed to be paid within a year. So that will become current liability and the remaining will remain non-current liability, 2,05,000. Next. Year end 31st December 2022, a new issue of 50,000 ordinary shares were made, raising 1,40,000. Manisha did not buy any of the new shares. So simple new shares have been issued, 50,000 and rate of 2.8, raising 1,40,000. Next, she has purchased the share already in the past, because she has purchased the share 5,000 into 2, that is 10,000. And we have nothing to do with that actually in the question. So don't worry about it. The examiner wants to make you sure that she has purchased the shares beforehand. Means the 50,000 shares which we have issued for a price of 140,000, it includes premium also. तो मनीषा ने जो शेयर खरीदे हैं उनमें प्रीमियम नहीं है, वो सिंपल शेयर है 2 रुपए के हिसाब से. आगे प्रॉफिट फॉर द ईयर अमाउंटिंग टू 90,000 and dividend of 67,500 were paid on all shares, including those from the new share issue. The market price of one share at the year end was 2.4. So the requirement which was in the question, I'm writing the requirement first. For 2022, you have to find the same things. And for 2023, you have to find the same things. That is going to be, number one is non-current liabilities. You have to find, then you have to find retained earnings, right? Then you have to find earning per share for both years. Then you have to find price earning ratio. If I'm not wrong, maybe that is not required. Let me check it out. Just a minute. Yes, it is there. Price earning ratio. Then there was gearing ratio. And then you have to calculate the dividend per share and dividend yield ratio for both years. So this was the requirement in the question. It's quite simple. Yes. For 2022, And for 2023, you need to find non-current liabilities at the end of 2022 and 23 retained earnings, earning per share, price earning ratio, gearing ratio, dividend per share, and dividend yield ratio. Let's start doing it. The first for 2022. So we need to calculate the non-current liabilities. For 2022, it is easily understand that for 2022, the non-current liabilities for 2022 is going to be 2,05,000. How come, sir? Let's see. It is clearly mentioned that non-current liabilities at 31st December 2021, that was, how much was 2,15,000. But out of that, it is clearly stated that 10,000 is supposed to be repaid during 2023. It means that out of 2,15,000, 10,000 in 2022 will become current liability because it is supposed to be paid in the next year. Whatever is going to be paid in the next year, that is a current liability. So the remaining is going to be the non-current liabilities for 2022. We are done with that. That is 2,05,000. Next is retained earnings. Retained earnings at the end. What are the retained earnings at the start? They are 1,65,000 for 31st December 2021. So you can consider like this. If I am telling you retained earnings at the start, yeah, ऐसे करने retained earnings at 1st January 2022. That's fine. That's fine. Because the retained earnings at 31st December 2021 will be the retained earnings at 1st January 2022. That is 165,000. Okay, let's do it. Let's write it down. That is 165,000. If you want to write the sign of dollars, you can. It's fine. Like this. Oh, like this. Okay. Now what we'll do? Add profit. We will add profit into it. That is profit for the year. Profit for the year is given 90,000. We don't need to subtract debenture interest or something like that because it is already given that profit for the year is 90,000. It means that the interest has already been subtracted. So we are not considering that. Especially interest percentage is also not given. That is the reason. 90,000 is the profit. So I will add profit. That is 90,000. Then dividend. We will subtract dividend less dividend. Recalculation जरा देख लीजिएगा बेटा. Okay, I should not make any mistake. करिए आप भी कर लीजिएगा बेटा. I am solving the question for the first time, obviously, because there is no solution. Even the question I have developed myself just by the whatever has been told to me regarding the paper. Dividends are 67,500, right? So I will subtract the dividends, 67,500, right? And if you just look at the question, a new issue of 50,000 ordinary share were issued. It is already given on the, apparently it looks that we have issued 50,000 ordinary shares, and those 50,000 ordinary shares we will calculate right now, but first we will calculate the retained earnings at the end. So can you give me the answer? What will be the answer? Retained earnings at the end or retained earnings at 31st December 2022. Please. What is the amount? One lakh 65,000 plus 90,000 minus 67,500. What is the dividend paid actually? We have to subtract the dividend paid. So what is going to be the answer? If you can do it little quickly, that would be favorable for me. No one is yet answering the question. Please. Or I have to calculate it myself. That is 165,000. Okay, thank you. That is 187,500. So let me write it down, 187,500. So we have calculated the retained earnings at the end of 2022. Next is we have to calculate the number of shares also. So let me do that. The old number of shares, which is already given in the question, the share capital was 2 lakh and per share value is 2. So the old shares, 2 lakh divided by 2, 1 lakh. 50,000 ordinary shares were made, raising 1,40,000. So it means that we have issued. So I can write bank 50,000 multiply by something, whatever, that is 1,40,000. 50,000 multiplied by, that is 2.8, because the value of the total amount of the share is given, that is 1,40,000. Share capital will be written with the face value everywhere. As we know, that share capital always come with the face value. 50,000 into 2, that is 1 lakh, right? And share premium will come also. That is going to be 50,000 multiplied by 0.8, and that will be 40,000. So this is how we have done that. But share bank is 1,40,000, share capital and share premium 50,000 into 2, that is always written with the face value, and share premium will be written with the per share premium, that is 0.8. How I have calculated it? 1,40,000 divided by 50,000, you will get 2.8. 2 is the per face value, 0.8 is the premium. Next, we have to calculate the ratios now. And the first ratio is for 2022 is earning per share. The formula for earning per share is profit after tax divided by number of ordinary shares. That how much earning you are getting on each share divided by number of shares. Because all are ordinary shares now, preference shares is no more a part of the question. Profit is going to be 90,000 divided by number of ordinary shares. We were having 1 lakh shares in the past previously. In 2022, we have issued more shares of 50,000. So the total shares at the end of 2022 are not 1 lakh, 2 lakh divided by 2, not 1 lakh, that is 1 lakh plus 50,000, that is 1,50,000. So can you please tell me what is the earning per share? 90,000 divided by 1,50,000. 50,000 shares have been issued more in 2022, and 1 lakh shares are already there in the past. 2 lakh divided by 2, 0.6 ratio 1. So we have calculated the earning per share, that is 0.6 per share. So you are getting 0.6 per share on each share. Profit is basically 0.6 per share. So earning per share we have calculated. Next ratio is price earning ratio. Let's calculate it. Price earning ratio is market price per share. The formula is market price per share over earning per share. It shows the investor confidence actually in the business, that how much investor is confident about the business. And when it is for quick decisions, that either it shows that business is growing on the rise in the future, business is growing in the future, and more dividend are expected. The more the ratio, the higher, the more the ratio, the better it is going to be. So market price per share is given in the question, that is 2.4. And earning per share we have already calculated. So 2.4 divided by, this answer will come in times. Earning per share is 0.6. The answer is going to be in times. So the earning per share is 0.6. 2.4 divided by 0.6. The answer will be in times. That tells that market price is that much times, 10 times more than the earning per share. The more it is, the better it is going to be. So that is going to be, if I am not wrong, it is going to be 4 times. So price earning ratio is 4 times, which is not that good. Let's see how it moves for the next year. The next ratio which we need to calculate is gearing ratio after price earning ratio. So the formula for gearing ratio is non-current liability over equity plus non-current liability. Non-current liability over equity plus non-current liability. Right? So for 2022, if you just look at the non-current liability for 2022, we have calculated that is 2,05,000. No other non-current liability has increased in the year. Nothing has been mentioned in this portion. So non-current liability is 2,05,000 divided by non-current liability plus equity. Equity means share capital plus reserve and surplus. that includes the part of the equity. So let's see that our share capital and share premium currently now. Let's see the share premium. Previously it was 20,000, right? The premium was there for 20,000 and share capital was 2 lakh. But now the share capital has increased. You remember that how much share capital has increased? 50,000 multiplied by 2. That is 1 lakh. So 2 lakh plus 1 lakh, the share capital, new share capital for 2022 is 3 lakh. Share premium has also increased 20,000 plus 40,000, that is going to be 60,000. Retained earnings, we have calculated at the end of the year already. And the amount of the retained earnings is going to be 187,500. Retained earnings at the end we will calculate, that is 187,500. So we will calculate all of them and then we will have the part of the equity, because equity includes share capital, share premium and retained earnings, even general reserves, revaluation reserves also, but they are not given in the question. So the share capital is going to be, how much? That will be 2 lakh plus 50,000 shares we have issued more for a price of 2, that is 1 lakh. So 3 lakh is the share capital. Share premium is 20,000 plus 50,000 into 0.8, 40,000 it will become 60,000, and the retained earnings at the end we have already calculated, that is 187,500. Can you calculate the total? 3 lakh plus 60,000 plus 187,500. We will have the equity 3 lakh plus 60,000, 547,500. So let me calculate it, 547,500 and multiplied by 100, you will get the answer of gearing ratio, because it is always in percentage. So what is the answer? 2,05,000 divided by 2,05,000 plus 547,500 into 100. So you can tell me the answer in percentage. The equity amount is 3 lakh, which is share capital. 2 lakh plus 1 lakh, which have been newly issued 1 lakh. Premium was 20,000 plus 40,000, 60,000, and retained earnings at the end we have calculated 187,500. So what is the gearing ratio, please? If you can tell me the percentage. Please. Yes. So the percentage of gearing ratio is 27.25. So for 2022, 27.25% is our, that is low geared, that is less than 40%. It means that we are basically investing in our business through non-current liability with a percentage of 27.25% out of the total capital. And out of the total capital, 27% is basically taken or contributed to from the outside capital. The remaining is basically the owner's capital or the part of the share capital or the part of the equity. Next is dividend per share. So let's calculate it. Next ratio is dividend per share. The formula is amount of dividend. It's quite simple, obviously. Amount of dividend divided by number of ordinary shares. Amount of dividend divided by number of shares. You will calculate the dividend per share. So amount of dividend in this question is 90,000 for 2022. Here it is given 90,000, and the number of shares, current number of shares are going to be how much? Dividend, sorry, I write it wrong. Dividend per share is 67,500. That was the profit. Dividend is 67,500, and the number of share is going to be 1,50,000. 1 lakh which was already available, and 50,000 is the new share issue for this year. So what is the dividend per share? Please tell me. Yes, that is 0.45. So 0.45 per share is the dividend per share. So dividend per share is 0.45 that I have calculated. Next ratio which was required is dividend yield ratio. Let's calculate it. YIELD, dividend yield ratio. The formula is dividend per share over market price per share, dividend per share over market price per share into 100. So quite easy. It tells that how much return you are getting on each dollar invested multiplied by 100. So dividend per share we have already calculated, that is 0.45, right? 0.45 divided by market price per share in this question or in this year, that is 2.4 multiplied by 100. So what is the percentage of dividend yield ratio? It means that that is the percentage you are getting on each dollar invested after 1 year, or after the dividend has been given to the shareholders, you will get that amount of dividend revenue. You may say revenue profit, 18.75% on each dollar invested. That is the dividend yield ratio. So this is how we have calculated all the ratios for 2022. Now we will move toward 2023. First, the non-current liabilities. Yeah, so any problem you can ask me directly. Non-current liabilities has increased. Debentures were issued of 1,90,000 actually, and because of that, the debentures were issued for 1,90,000. So the non-current liability has increased. That is 2,05,000 previously plus 1,90,000. So the total is 3,95,000. So now the non-current liability is 3,95,000. Retained earnings we can calculate at the start is going to be for 2023 is going to be 187,500, which was the retained earnings at the end of 2022, and then we will add profit. Profit for the year is 128,700 and dividend is 78,000. So 128,700 and dividend is 78,000, which needs to be subtracted. So can you please tell me what is the retained earnings at the end for 2023? Please. Very easy, no problem. You can do that. Just calculate it and tell me. Yes, please. Always remember that some new shares have also been issued. So we will discuss that also. But first, I just want to get the answer, that is 238,200. So hopefully from my students from Africa and Mauritius and Zimbabwe, you must be finding this question quite interesting, because it involves most of the part of the ratios along with little part of the company. So we have, every time we have new questions in the paper. We have already discussed that. The 238,200 is the answer. Now let's see that we have issued some bonus shares on the basis of 3 ordinary shares for every 10 on all the shares issued on that particular day. The market price is 3.3. So let's calculate it. Currently, our total shares are 1,50,000 right now, because 1 lakh was in the past. In 2022, you have issued new shares of 50,000. And now we are issuing bonus shares, 3 new shares for every 10. So what I will do, the quota system is 10, 1,50,000 divided by 10 multiplied by 3. You will get the number of bonus shares. I'm talking about number of bonus shares, not the amount. So that will become 1,50,000 divided by 10 is going to be 15,000, and 15,000 into 3 will be 45,000. And you multiply it with 2, which is the per share value. So the 90,000 is the amount of bonus. 90,000 is the amount of bonus share which you are supposed to issue. Bonus share means that it is capitalization of reserves. Reserves are converted into share capital. Simply, reserves are converted into share capital, and that amount has been taken from the share premium. Yes. So let's see about the share premium. The amount of share premium is currently 187,500. In 31st December 2022, the amount of share premium is 187,500, right? So we can easily pay bonus shares of 90,000 from 187,500. share capital will increase 1,875,000 minus 90,000, right? Share capital will increase by 90,000, and obviously share capital will increase by 90,000. So it was in the past, our share capital was how much? That was 3 lakh. Now it will become 3,90,000 amount. And 60,000 was the premium. Let me check it out. If I'm wrong, the premium was 20 plus 40 as 60,000. So it means that 60,000 will be taken from the premium, and the remaining will be taken from the retained earnings. So retained earnings will decrease more by 30,000. So 70, I will write over here, 238,000. I will subtract 238,000 minus 30,000. We don't need to prepare the whole thing because question didn't require us to prepare 208,000. That is the retained earnings now. Premium, this is going to be finished because the whole premium has been utilized for the issue of bonus shares, that is 60,000. And the remaining amount of 30,000 will be taken from the retained earnings. 238,000 minus 30,000, 208,000 is the 208,200. Just a minute. Okay. 208,200. Now you can calculate all the ratios again to solve the question. It is quite simple. All the ratios can be calculated again to solve the question. 238,200 minus 30,000. The answer is 208,200. Now you can calculate the ratios again. For example, I'm just telling you because the time is short. Earning per share, profit is 128,700 here. Profit is going to be here 128,700. Here you will divide the profit with the number of shares, that is going to be 1,50,000, and the more share are 45,000. So you will divide it 195,000 से divide करेंगे तो आपके पास आ जाएगा. Price earning ratio, market price per share 3.3 है. In this question, divided by earning per share, you have already calculated it. You can do that easily. 3.3, here it is written. Then gearing ratio, non-current liability over equity plus non-current liability. Non-current liability is now 395,000, and equity you can calculate, that is 390,000. That is the share capital. And premium, we have, there is no premium, that is 0, and the retained earnings is 208,200. You can easily calculate it. Then dividend per share is amount of dividend, that is 78,000 divided by number of shares, and number of shares are going to be 195,000, 45,000 shares. Then dividend yield ratio, you can calculate dividend per share over 3.3 into 100. So this is how we will calculate the rule. If you want to calculate the equity for 2023, I will write the answer. The equity is going to be 3,90,000 for the shares, plus you will be having how much? 208,200. That is the equity. Non-current liability is already given, that is 395,000. But I'm talking about the equity. How much it will become? If you can calculate, whatever it is, you can calculate it. Ordinary share capital is 390,000. 3 lakh plus 9,000 plus 90,000, and 2,082 is the retained earnings. So if you have any problem in this question, this is in front of you. You can take the picture also. You can ask me. I can make it more clearer. I will try to make you understand. Any question, you can WhatsApp me also. Even after taking the answer of the 2023, you can ask me anything from anywhere else from the world. I'll be waiting for your response. My number is 0333471289. You can WhatsApp me also anytime on my YouTube channel or on my WhatsApp number. I'm ready to answer your every question, either you belong to UK, Zimbabwe, or any other country. Second thing which I want to tell you, there is another part which says that tell any other ratio in which solvency. Tell any other solvency ratio. This was the question. So that was interest income gearing ratio. What was the ratio? Was income gearing ratio. That also tells you the solvency position of the